Equity futures are derivative contracts provided for investors to be able to utilize larger leverage as well as benefit from short selling to hedge their portfolios or benefit from a downward market. These instruments follow the underlying directly and give the investors a capability to utilize these tools. Investors are able to trade these futures now provided by the DFM directly from their DFM trading accounts. All they need to do is contact their brokers and sign a futures agreement, and that will give them the ability to access all these futures very easily and access all the benefits that these futures provide them. This has been made simple now that the DFM is offering these futures and has listed these futures for DFM listed stocks. All investors that have access to the DFM market are able to now trade these futures offerings. So that makes it available to all nationalities. It's in the same currency as the underlying, which is the dirham, as well as they've simplified all the accounting from the account side, giving them the ability to just access it directly from their investment accounts using their same national investor number, as well as, in fact, the same trading account. So all investors have to do is contact their broker, request access directly to those futures, and by just signing an agreement, any of their brokers would just give them access to it directly. The exchange appoints market makers to provide continuous and consistent liquidity on these equity futures. This assures investors that there will always be bids and offers that they can transact on when they want to access these futures. Since these futures are following directly the underlying, to make sure that there are always prices for the investors to transact in, what the exchange has done, they've appointed market makers, they provided specific parameters for these market makers to follow, and they're monitored continuously and consistently. And this gives the assurance to investors to be able to always be confident that there will always be a price that they can trade at. Investors need not worry that they can access the market, whether to get in or get out of a position. And that is the primary purpose for the exchange to appoint these market makers. There are multiple benefits for trading equity futures. The two largest and most important would be the availability of increased leverage. So while on cash equities, investors have the ability of getting 50% margin or 2 to 1. With futures, that can rise to as much as 4 to 1. And that additional leverage allows for investors to utilize less cash to express a similar position that they would otherwise require. So the second benefit would be the ability to short sell. Futures give investors the ability to short sell a stock or security via selling it first before they buy it. That gives them the ability to benefit from a market that may be falling. It also gives them the ability to hedge an existing portfolio. So if an investor has an existing portfolio that is a bit more long-term but may be worried about the short-term volatility in markets and would like to hedge away that risk, they could short sell in the futures market, utilizing a much smaller amount of capital needed as per the increased leverage that the futures provide. And these benefits is what equity futures provides for investors, which are quite valuable.